We have also seen quite a divergence in currency performance across emerging markets. So, what factors do you think are driving this divergence? And importantly, what could this mean for India's outlook?
Sure. Very interesting point. And I must say that when you look at this chart, it is a bit of a shocker to see India at the bottom of this. So it means we are the worst performing currency against the US dollar. Largely, these are emerging economies from across the world. And of course, these are all oil importing countries, INR, Philippines, this is Japan, this is Korea. So these are really the worst performing currencies. Now, typically in the past, when we talk about the rupee, we talk about the trade deficit, we talk about the current account deficit, because these are the numbers that we talk about in the context of the factors that would cause the Indian rupee to depreciate. And by the way, when you look at this chart, what you'll see, best performing currencies, these are all energy exporters. Mexico, that's Australia, and that's Brazil. So the best performing currencies in 2026 year to date are the exporters, and these importers are worst impacted. Now, typically, the prism that we would always use is to discuss things like fiscal deficit. We would discuss things like oil prices, the trade deficit. I think this time the culprit actually is coming from somewhere else. What is that somewhere else? You will see that on the next slide. Um, yeah. So this is really the problem. We are used to the fact that India normally has a current account deficit. If you look at India's current account deficit, actually for the year FY26, it is comfortably within 2%. 2% is the level of comfort that the RBI normally indicates. In fact, I think we'll be closer to 1.5, 1.6%. Now, how do you fund this deficit? You fund it with capital inflows coming into India. India has been the recipient of large capital inflows from all parts of the world, including FDI and FPI flows. The challenge in India has been that FPIs have been significant net sellers for 2 years in a row. This is the FII selling which has happened in the market in FY25 and FY26. So they have been taking out capital. Not only have they taken out capital, if you compare India to all the countries you see in this list over here and compare the sell off as a percentage of market cap, India is effectively being the outlier. So the reason for this poor performance of the rupee in the last 1 year, I would submit for a change, is not because of the current account or the trade account. It's because capital inflows into India have been soft. What you saw on this slide is the FII outflow. But interestingly, when we go to the next slide, what you will see is that not only because of the FII outflow, but you combine that with the outward FDI and repatriation. What does that mean? Outward FDI is the FDI that Indian companies are doing. Repatriation is nothing but large global multinationals pulling back capital from India. Sometimes they could be dividending it back, and in other times they could be getting listed in India and taking the proceeds of their listing back to their home territory. Now, when you look at this chart, what you'll see is historically, this number has always been positive for India, right? There have been times like 07, 08 when we were hugely positive. In the GFC, we briefly went negative. And even during the taper tantrum, actually, this number stayed as a positive number of GDP. In the last 2 years, this number has actually declined, and capital flows as a percentage of GDP have actually gone into the negative territory. So this, to my mind, is actually the big reason why the rupee has ended up becoming such a big underperformer relative to other geographies, a very different reason compared to what we have seen in the past. So yes, I know in the past we've said we don't worry so much about oil prices because that's getting funded by our net software exports to the rest of the world. That continues to be true, but our capital account, which we always depended on for inflows, have actually ended up becoming negative, and that's the reason why the rupee has experienced this additional pressure.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.